Good morning, everybody, and welcome back to Schwab Coaching. It's the Monday edition of Trader Talk in today's market, and I am your host, Kevin Horner. It's a sunny and beautiful morning here in Denver, Colorado, and today I'm joined by my friend and Schwab's regional investment strategist, Rachel Deshelle. Good morning, Rachel. It's great to see you again. How you been?
Good morning. I've been great. How have you been, Kevin?
Busy, but excited to be here. Excited to have you with us to discuss a pretty big Monday morning for us. We got some confirmation of the current administration's tariffs on Canada and Mexico. Both seems to be adding some weakness to our markets this morning, doesn't it?
Yeah, I definitely think we have a lot to look at this morning, so I'm excited for our discussion.
As am I. So let's get down to business, everybody. Say hi to our friend Connie Hill in chat. If you're not already doing so, you can take a minute and follow Connie and me on X. You can do that for Connie. It's at Connie Hill CS, and I am at Kevin Horner CS. We try to post for you periodically throughout the week, give you some things to keep an eye on and opportunities to engage with us outside of our segments here. So it's a good way to get with us when you are not attending a session or not watching an archived segment, for example. You can always reach out on X. We'd love to hear from you. Additionally, make sure that if you like today's discussion, hit that thumbs up button for us before you walk away from it today. We greatly appreciate that. It helps us out quite a bit in the YouTube algorithm, as we will be archiving this particular segment for you as always. So with that, let's cover some disclosures, and then we're going to get into the look at the charts with you all. Remember that, I should also point out, don't forget, got to head up that schwab.com/events. Remember, we do have opportunities for you to see us out live and in person. We're doing a bunch of workshops. Check out schwab.com/events for the upcoming schedule. And remember, you want to keep an eye on it about week to week so that you know when our registrations become live. The registration process does fill up kind of quickly. So the sooner you have an opportunity to get in and secure a registration slot, the better. Now, in terms of today's conversation, remember that it is entirely informational and educational. We do not make recommendations nor endorsements for any particular approach or strategy to trading the market here. We do talk technical analysis, though, quite a bit. Please remember to think of technical analysis as a complement to your broader fundamental research. We often say it in many of our educational classes on technical analysis. We kind of think of fundamentals as the way to build the grouping of equities you would like to invest with, and then technical analysis can assist you in understanding when it may be appropriate to invest in those very companies. So that's just one way you can think about things, everybody. Now, as far as our agenda goes, we will keep it standard. We're going to start broadly. We're going to look at the major indices with you all, try and get an understanding of where money is moving around today, see if some of the levels that we've talked about in the past are going to provide us some opportunities for potential support. And that's going to be probably the word of the day today, I imagine, Rachel, is support, because when you go through sell-offs like these, the hope is that we get to areas that bring new buyers or interested parties back into the marketplace. So let's start with the S&P 500. Rachel, looks like we've once again opened below both the 20 and 50-day simple moving averages in this pullback this morning.
Yeah, we certainly have a bit of a decisive move with that gap down below, like you said, both the shorter term and kind of the medium term sources of trend there. But I would say for a lot of different traders, I know certain things that they look at is not only just in the first 5 minutes of trading or 15 minutes of trading if we gap below, but they're going to be looking more towards where we're closing at. And
Sure.
possibly if we're going to have consecutive closes within, I guess, below that previous support there, now new resistance.
Yeah, that'll be an interesting spot, won't it? We've already managed to trade up through the low that we had about a week ago, and we thought that that was a good new short-term higher low. That kind of remains to be seen now, doesn't it? Being that we've moved through that level, we're hoping that this is a conversation of price discovery right at this spot. But we could lean into maybe a shorter term window that might help us out in the immediate future by looking at, say, the 5-minute bars here for the last 5 sessions and or the last couple sessions, as it were. This is about, there it is, 5 full days. But here, Rachel, if you're an intraday or very short-term trader, you are not enthused by the open and its location. This pivot point, we are below support 1. We opened and gapped below S2 as well, Rachel. So this stands out for a lot of technicians in a short-term basis as well, doesn't it?
Yeah, it definitely does. We'll have to see if we can rally up and close or fill part of that gap. Kind of what I was alluding to earlier is we have to see where we close today. But another level of support that a lot of traders could be looking towards, since we took out that previous low from 5 days ago, they could be looking down more towards that 588 or 5884 level as another area to possibly close out positions or set their stops.
Okay, good sight there as well. 5884. And interesting, I wonder if that coincides. It's going to be close to this gap zone, isn't it? The low on the day we gapped back above the 20-day here, that low was 5905. So that's about a 20-point range, Rachel, that we probably need to keep an eye on. If we start slipping through this low, then we could maybe fill in the gap zone in there. But that looks like a spot where at least traders in the short run are probably thinking, okay, let's see if we can get a bounce there, being that that's a gap level that may very well provide additional support. Not to mention that it is a round figure right at 5,900. That also can add some support or resistance depending on which way we're moving at any given moment.
Definitely. It'll all depend on how much supply or demand we have at or below that level, and if the buyers tend to step in, if and when we do kind of go through or touch that level there.
So we'll give us that. Obviously, gives us plenty to keep an eye on as it relates to the SPX for the remainder of today. We're off 1.5% here, a little bit better than we saw maybe on the overnight initially. Let's move on into the NASDAQ 100. We're a little bit redder here, 1.6% negative. Again, a gap down. Now, I got a lot of lines drawn in here, Rachel, many of which are no longer terribly valid, being that we've been thrown right back into this falling wedge situation. I'm going to eliminate all my lines. Let's kind of start from scratch here, and I'll zoom in from our August 5 bottom into what we are witnessing here. What do you think about that last low, maybe as perhaps our zone that we got to keep an eye on right around here?
I would agree with you there, and I like where you drew that line just because, I mean, we gapped below on this one as well, the 50 and the 20 days. So we're going to be, a lot of traders will be looking for kind of that next level of support where there may be a larger amount of stop orders and possibly giving us that level of liquidity there. But I notice, I mean, looking at the last couple weeks of price action, we made a lower high this time. We failed to take out those all-time highs at 133. And so we've just seen a ton of chop, a ton of sideways action over the last few weeks, I guess last couple months, really. So kind of what a lot of traders may be doing too is just refining where to take profits and where to set the stops, and possibly just managing a little bit of risk too.
Yeah, I think it's a great reminder, first of all, that we don't know what's coming next. But what we do know is as we look at price action and how the market reacts to certain levels, we can at least work to set our risk, the comfort that we have for maintaining existing portfolio size and position. So if you're sitting on a lot of investment dollars and you said, boy, if the NASDAQ traded under, say, 21,000 here, you'd be getting a little bit less comfortable. And if that is the case for the holder of a portfolio, well, then they might use movement through that level as a means of reducing position size, generating cash, leaving risk a little less than they had been previously. It's just a way that traders will manage their scenario, right? Using price action to dictate how they are going to approach the market. When you start feeling more confident, they start to put more dollars into the market. When they're less confident, they pull that money out. That seems like a very generic statement. And yet, Rachel, as traders, we can often find ourselves with our hands just sitting on our hands because we did not think about it in advance. So I think it's very important to know the levels where you want to move on and take your opportunities. It's a big part of what traders have to be thinking about constantly. Now, Rachel, one thing that you mentioned pre-show that I have to bring up here is the thought process around the tariffs that were assigned this weekend. The idea had been perhaps that maybe there was some market action in advance of this, expecting the tariffs. There's been a lot of rhetoric and discussion. It's not like we should have been surprised by this, right? So has the action perhaps of the last, say, 3 to 5 weeks really been indicative of this anticipation? And then is today possibly, with the announcement of all of this over the weekend, is this perhaps the opportunity to cover some of those trades that may have been betting on the market taking it down further here? What are your thoughts about that kind of narrative process here today?
Yeah, of course. So I think, I mean, like you said, first and foremost, just having a process, because nobody has a crystal ball. We can all have, I know sometimes investors kind of set expectations on as far as what's about to happen or what's happened in the past, and just kind of comparing that to price action now. And so I know that one of the things we've noticed, like especially with looking at, I know with tariffs, with looking at commodity prices, that's been something that investors have been looking at, where we've seen a bit of a move over the last few weeks, and we've seen moves in volatility as well. So, I mean, really, you could almost call it like a buy the rumor, sell the news type of event. But that's just my take on it.
Well, you know what? We're going to find out today, tomorrow, probably, right? If today is one of those weak opens that brings buyers in and we have a stronger finish, we have to make note of that. That would not be a terrible development, obviously. I have to point out once more, terrible open as it relates to the NASDAQ, gapping support 2 as well, which means that support 2 becomes a very important level to recapture and hold on a short-term intraday basis. This is the case in both the NASDAQ 100 and the S&P 500, everybody. So you've got something to keep an eye on as it relates to very short term. This first hour can be quite telling. If we don't get that bounce in the first, say, 60 to 90 minutes, that at least lays the low of the day at the open, well, then things could get decidedly more negative. So I think it gives us plenty to watch here in the first 60 to 90 minutes. Now, before we move on to the Russell 2000, I wanted to get to a question that Grumpy Gene had asked in the chat here, asking about tariffs and the announcement of tariffs. Would you refer to this perhaps as a black swan event? I'm not sure that I would, Gene. You know, honestly, I'll certainly toss this to Rachel as well, but I'm of the belief that, you know, black swan by definition implies that nobody knew any of it was coming. We were not expecting this. This was an out of the norm scenario. And as we just got done talking about, yeah, this conversation around tariffs has been going on even prior to the election day. This was all part and parcel of the new administration's process. At least it was forecasted as such. So I wouldn't call it black swan necessarily. But what about you, Rachel? How do you feel about that question?
I would definitely agree with you there, because black swan events are more of an unexpected type of event. And to your point, Kevin, I mean, this is something that we've seen, and we've talked about a ton of times on this show in the past too. Commodities prices have priced in a little bit of an uptrend there, and we've seen some different groups across across markets just possibly pricing in those expectations of tariffs. Because I mean, if it's one thing, I know he stays true to his word. So, and that's what the markets have seen in the past. So, it's more of a unexpected type of volatility scenario.
There you go. Yeah. Typically, I think of Black Swan as something that has a much greater impact. Obviously, we could find the most recent real Black Swan event was the COVID situation, of course. And, prior to that, we could probably say the great financial crisis, even though that could have been forecasted if people were actually paying attention necessarily to what was going on. Rachel, how about we slip on over to the Russell 2000 here? I've been talking quite a bit for the last 2 weeks about having to find resistance at the 50-day moving average. Sure looks like we found a pretty healthy wall of sellers at the 50-day there, right around 2,300 to 2,310, doesn't it?
Yeah, that chart looks pretty similar to some of the other ones as well, where it's just like we made a little bit of a lower high and then we're back under that crucial level there in the short term. So, the next real area of resistance right there is going to be right below that 20-day simple moving average that you drew out. And then also, as far as support, I would say it's the rest of that gap right there around 2222 possibly. Yep. That could be our short-term support.
We'd like it to be, wouldn't we? Because that would be close to where we are. But there's just, honestly, we're splitting hairs if we get a bounce here at 2225 versus, say, 2180, where the 200-day moving average resides. If you're setting risk and you're looking at the Russell, not a lot of traders are gonna pin their exit strategy to the 2220 level. Unlike the 200-day moving average at 2180, I think a lot of traders might lean into the longer range zone of support, that being the moving average. And when you consider the instances in the trend over the last year plus where we've found the 200-day to be supportive for us, I think it's much more likely traders will position against that. Would you think that that's a fair assessment as well?
Yeah, if we break out that level in the short term, a lot of traders will be looking for where we made that next lower low. So just like you called out, halfway through January, we made that lower low and touched that 200-day. And I always say as well, Kevin, the market shows the significance of those levels by how many different times it was touched. So definitely agree with you there. For people that are managing longer term risk, they'll be looking at that 200-day moving average.
Yeah, I think so as well. And we often remind ourselves that when we're in the midst of selling, we try to allow the selling to run its course before we start positioning the other direction. And there's a great question in the queue here from Alexis. Just what are the indicators to look for when a recovery might be beginning? That all comes down to time frame, doesn't it, Rachel? If we're very short term and we're worried about what's happening intraday, we're going to look at that 5-minute chart. We're probably going to check out the pivots. But by the same token, if we're looking at this from a daily chart standpoint, what are your thoughts about that first real indication that you might have something working for you? What is the move you might be looking for as it relates to either a major indice or an equity in the midst of a pullback like that?
I would say definitely a change in trend. So taking out a former high, taking out a former low, because that's really going to show a lot of traders. Because price is obviously the leading indicator. So if we're taking out a prior high, if we're taking out a lower low, that is definitely kind of the first thing. And I know a lot of traders will also look to secondary signals like momentum as well. So they'll look for when the rate of change of price is kind of speeding up or slowing down there too. But to your point, a lot of traders and investors will look at this trend across various time frames to see if there's an alignment or to see if it tells a different story with the trend.
Absolutely. And this is going to be easy, I think, in terms of, it's always easy with technical analysis when we look backwards in time and we can point to indications that, oh, that was a wonderful opportunity. So let's just zoom in briefly as it relates to the Russell here. And really this move here off the 200-day, the couple things that stand out. Number one, we hit the 200-day moving average yet again in this trend. So the 200-day potential of support for us. We also had a hammer at the 200-day, meaning we traded lower in the morning, and then in the end of the day, we finished at the top of the candle. So our strongest point of the day was the close, and it gave us an indication of a potential shift in sentiment. Now, this is not necessarily the day where even an aggressive trader would be interested in adding. However, it was the next day. And you asked, Alexis, is it potentially a hold move, a close above the high of the low day in a pullback that would give a trader that opportunity? And yes, that would have been, this day here could have been that indication that some traders would have used to then deploy new money. Now, the question, of course, says, hey, how long are you going to ride that trend? Are you eyeballing it as, okay, if we get to the 50-day, I'll take some profits, or I think it's going back to new highs? You always got to manage it along the way. But I really think that when you're looking at it, your comment about Cahold might very well be the original or initial entry that a new trader would consider, but it does need often, Rachel, to coincide with movement at an area of potential support, doesn't it?
Definitely.
Yeah, can kind of strengthen the idea, if you will. Okay, so we've hit up the S&P, we've looked at the NASDAQ 100, we've looked at the Russell. We're having a little bit more weakness here in the semis. Let's look at the semis. We have, boy, that was about a textbook bounce back move, Rachel. I'm going to zoom into what's gone on here. We had this huge breakdown, right? And then this was on the so-called DeepSeek situation, which we saw a question on as well. Would you call that black swan? I'm not sure I'd call that a black swan event. If it might be a volatility-inducing event for the semiconductor space and the AI story. But what I'm pointing out, or what I'm noting more than anything, was the significant bounces from areas that should be support. We noticed that we got down to this level a couple of times, so that's not a surprise. But then we bounced real aggressively on Friday into that 20-day moving average and got sold off really, really strongly. So, Rachel, the levels seem to be pretty well established here on the SOX, giving us some ideas as to where we would get more defensive or maybe get some, start putting more money on the table. But are those levels the same ones that I've drawn in?
Yeah, so I'm looking at the same ones as well. So if you zoom in again where we saw that big candle near support, so we saw that big bearish candle on, I think it was near the 27th, which really just showed the power of that move as far as just holding that level and all the range that it traded throughout that day. Then the following day was that inside bar where you saw basically such a much smaller range of where price opened and closed. And the fact that we're still holding where that closing price was from that larger candle, I think definitely shows that we may see some buyers stepping in here at potential support.
That would be basically 47.75 up to about 48.25. So about a 50-point range on the SOX index here. But one thing we can say is that the level there at 47.75, 47.80, very important level now because we have tested it a few times and we've seen bounces there. So we know that there have been bullish investors waiting to send that money into the SOX at this level. Unfortunately, that likely means that if we traded beneath that level, Rachel, it could get decidedly more negative, and that could be a quick and speedy move to the downside. So that definitely gives us something to watch on the SOX here for the short run, because unfortunately, that next level of support, at least from a horizontal standpoint, is down here around 45.30. So that'd be a couple hundred points. And if we were going to find the ultimate support at around 4,300, even further that it could fall.
Yeah, we definitely, it depends on your time frame, like we said before. So in the short term, if you're looking to be a little bit more short term, trade throughout the day or trade throughout the week, those would definitely be some levels that you're looking at. And then in the longer term, like you mentioned, closer to that 4,300 level.
Okay, so we've got some levels to monitor on the stocks. Let's check out the transports. Transports getting absolutely crushed, down 3%, finding support potentially. We need to see some tails like this, like we had about a month back or so. If we could turn that into a bounce level today, that would be fine. We'd like to see that. But maybe the story here, Rachel, is told on our Dow theory look, huh? A combination of looking at the Dow Industrial Average alongside the transports. As you and I were discussing pre-show, I've got that chart up for you. They look quite a bit different now, don't they?
Yeah, yes, they do. I mean, typically for traders and investors that have heard of Dow theory, typically we look for the Dow Jones Industrial Average to move with the transports average, just because we have to have a correlation of us producing the goods and then being able to transport those goods in a healthy economy. And so when that disparity exists, sometimes traders will look as far as how that could be a signal to something in the market. So we kind of made those recent highs in the Dow Jones Industrial Average, and then we're making a lower high in the transport average. So it's almost a little bit of a divergence type story.
Yeah, a little bit. And further, the other thing that stands out on this to me is the location of the transports along the trend line. Anybody remember back to October of 22 when the market rally really began? Well, you can see, I mean, here's the October of 22 bottom in the Dow Industrials. You can see that, we made a fantastic push. That was about 56, 57%. Upward over that window of time in the industrials. And we made a similar move in the transports, but it sure feels like, Rachel, now the transports are leading us lower. And if the transports were to break down from here, breaking a long-term uptrend, that would be a significant development. And that certainly could mean more volatility for us. All right. The other thing, Rachel, that you had brought to us previously was a look at the highs and lows. We had looked at, this was a great chart that you created for us. You brought it to the segment here a couple months ago, and I've been referring back to it frequently here. And that is a look at the S&P stocks over their 200-day moving averages, over the 50-day moving averages, and then new highs and new lows on the NYSE. Is there anything you're taking from a look at this today?
Yes. So I guess we talked a little bit about price, and obviously that's where you want to first look at it, or one of the things that you look at with your process. But I know one thing that a lot of traders, including myself, tend to look at as well within a process is just looking at market breadth, so the overall health of the market. So comparing different stocks to how many are above their 200-day moving average versus below, how many stocks are making new yearly highs versus making new yearly lows. So the one thing that I notice about this chart is just in the longer term, we talked a lot about that 200-day moving average, and we still have over 50% of stocks above their 200-day moving average. So right now, currently sitting at 54%. So that's still the majority of stocks that are in a long-term uptrend.
Yep.
Now, if something like that were to change, or if it were to go lower, it creates sometimes a buying opportunity for investors as well, as far as stepping in when there is weak market breadth. But is there anything in particular that you tend to look for within market breadth here, Kevin?
Well, I loved your call out on the 200-day being still more than 50%. That's a healthy reminder of the strength of the trend. Let's put that alongside. But when we look at the 50-day and see that the 50-day moving average, we got under 20% at the end of the year. And that stands out to me. And so 20% aren't in short-term uptrends. That's what that means. Now we're at about 38%, but it seems like we're getting lower. We're certainly getting some selling here today. So my thought would be, let's look at that at the end of this week. let's see how this appears the end of this week, because retreats into that 20% zone have been opportunities, perhaps, right? Because once we've seen us dawdle along the 20% line, we've seen buyers coming back into things. But if we witnessed, for example, a new low in the number of companies in the S&P 500 above their 50-day and something similar to the 200-day, then I would start to get a lot more uncomfortable. That's how I would pick that up. That's what I would take from that assertion. Now, that's not suggesting that that's what's going to happen, but that would be the significance of, for me, the significance of these levels that we've been monitoring. I see I've got a few requests for it, so I'm going to go ahead and share the grid with you all, just so you've got it in the chat here, everybody. Please remember that any scripts we share are not guaranteed for accuracy or for timing, and certainly not an encouragement to be used, but you can absolutely reference this if you would like, everybody. Rachel, what do you say? You mentioned commodities a couple of times, and I did not give you the opportunity to elaborate. So what do you say we look at a few of those today? Do you want to start with oil?
Yeah, definitely. I think that's
all right. Let's pull up crude. We're getting a little bit red here. If I zoom in, looks like we had an open where we spiked up into that 200-day, but we've kind of continuing the trend that we've been in for the last couple of weeks here all of a sudden.
Yeah, and I know this is one of the commodities that may be impacted by tariffs as well. So I know some investors may be looking at this in the short term. So we've held that low, it looks like. So that low that you marked out there at the green line looks like it would be that next level of support. And it coincides with that 50-day simple moving average, which is slightly tilted up, telling us that in the short term, we may be in a little bit of kind of like a change of trend there, just because we saw the 50 was slanted down, it kind of bottomed out, and now it's kind of pointing up a little bit. So the slope can tell us a lot about that trend. But in the shorter term as well, that next level of resistance could be that 200-day simple moving average. So I know we talked a lot about the 200-day simple moving average today across the indexes, but that could be that next level of resistance.
Yeah, that would make sense. I was noting here, my eyes were kind of drawn to this trend line as well. The action we had above the trend line lasted all of about 5 to 7 sessions here. And we got rejected at the trend line, or the confluence of the trend line, the 20-day, the 200-day. I think it reillustrates for us the necessity for oil to hold. If you're feeling bullishly on oil, you need to hold 72 a barrel. Under 72, bearishness probably comes back into the mix here. And then we're looking at a new range, right? 66.5 up to 72 once more. But the levels, I think, are pretty well defined. I'm not going to be able to speak to the narrative story here nearly as much, but I think we've got some levels to monitor. Now, one area that we should talk about is the risk-off situation associated with Bitcoin. And again, we're not talking about trading it. We're simply talking about the levels, but a significant bit of selling on an overnight basis. But I'm intrigued by this hammer we got on this action. Overnight and over the weekend, things were pretty weak. But that right now looks like a bounce for us, Rachel, at this point. Your thoughts on what you're seeing from this on a technical basis?
Yeah, so it looks like we touched that prior low. So we traded all the way down to the prior low, and before when we traded below the 50-day simple moving average, it kind of took out that level. But then the buyers were able to push it back above that level, and then we've touched it just now again. So I would definitely say that's a level of significance there as far as just in the short term support, where we've seen maybe some bulls stepping in. And then I know that next level of resistance could be that 50-day simple moving average in the short term, and even that entire window or gap from that prior low.
Oh, yeah. You're talking about The gap we just made, excuse me, this one?
Yep. Yep.
Okay. So working our way back through the 50-day means maybe we could start to fill that gap zone. We can trade as high as the low that we had on Friday, which would make a little bit of sense. Now, real quickly on the intraday, yeah, so we bought it up at around 91 and a half or so. A little bit of a notable move, though. Again, the one thing I've been applying as it relates to Bitcoin is just the risk on, risk off scenario. When the market's feeling risk on, Bitcoin's done very well. When the market's feeling risk off, you've seen Bitcoin hit with selling. And again, I'm not suggesting that we are going lower from here. I'm actually encouraged by the level at which we bounce. So I would suggest, yes, Kay, I would suggest that gap rules apply, whether it's Bitcoin or anything else. I think if you're a technician, you believe in price, and price matters, as do gaps. I think that carry the same weight regardless. All right, how about some of these precious metals? Let's look at gold. Breaking higher. So Rachel, if we looked at this as nothing more than the technical breakdown, this does look like a breakout in the gold medal, does it not?
Yeah, gold is definitely making new all-time highs. We had a power move through that previous resistance level around that 2,800. And it looks like today we're pretty much at overbought levels on the RSI as well. So with the move, it looks like momentum's following with it too. And I know one of the things that I like to look at as well, and I know you do too, is just looking at different time frames. So
sure,
I know in the longer term, you'll see the strength of the trend with gold, and just the significance of that level that we broke through there just recently.
Yeah, real nice ascending triangle from there, isn't it? I mean, the pullback to the 20-week moving average, as it were. That's this light blue line I've got in here, and you can see how moves to the 20-week moving average have been bought up. You've got a lot of higher lows in here, depending on how you choose to draw it. You could start from this consolidation, this nice little flag we had all the way back here. You could draw it like so, capture all of that. That's how I had it drawn in originally. But again, moving through this level here at around 2,800 was a significant development. All right, Rachel, we've only got a couple of minutes remaining. Now, I've definitely got a few individual equity positions we could look at from an upgrade or downgrade basis, but I wanted to give you the opportunity. Was there anything else on your side of things that might be notable, things that have piqued your interest or anything like that you wanted to cover before we look at those?
No, I guess natural gas is the only other thing that's moving today quite a bit.
Let's look at that. So it looks like it underwent the selling into the weekend and found some support at a pretty notable level, didn't it?
Yep.
So if I was to draw a line from this level in here, I probably should use the line. There we go. That could easily be construed as support, no?
That is the level that I'm looking at as well. So it looks like we gapped up right after touching support. So we traded a little bit below it with the low of the day and then gapped up above that high. So could it be another hold setup?
Yeah. It's early in the day right now, of course, yep. But if that was the finishing candle for the day, I think many traders would call that a hold, because it would be above the high of Friday's close. And we're also in the gap already. So, maybe today's move loses a little bit of steam if you close the gap all the way at 336 or so. But nonetheless, a really nice bounce today. And again, happening off of a zone of support really re-illustrates for us, Rachel, the importance of what a hold move can mean in the initial stages of a bounce.
Definitely.
All right, so maybe that bears watching. We should also point out, though, we are below the 50-day with some time now. You're looking at about 5 sessions below the 50-day moving average, so that does stand out as well. We got the VIX rising here, everybody. We're up 20+%. Let's see the level on the VIX. So we had a little bit of maybe cover in the first hour of trading here today, Rachel, some profit taking from Friday through the weekend, perhaps. But it seems like the VIX is spiking yet again as the rest of the market is seeing deeper levels of red here. So I think the takeaway right now, there's your S&P 500 heat map, everybody. Not a whole lot of green shoots. They are very limited in scope. It looks like if you're scouring the market for upside bullishness today, it might very well be limited to pretty much healthcare at this point.
Yeah, it looks like healthcare, a couple communication stocks. So a little bit of green in there, but a lot of red.
Wow. So that healthcare chart, I've been talking about this for a while since we started building this higher low in here. Had a really nice 2-week run, building a bull flag at this level. But remember, not all bull flags are created equal, everybody, especially bull flags at resistance. These are difficult, significant range of resistance. Even a throwback that gave you maybe a support test at the 20-day again, that would be nice because it would still be a higher low in that time frame, Rachel. So healthcare is improving, but if we're going to be getting bounces here, maybe this is something that we can keep an eye on for the coming week. We always want to evaluate relative strength and performance as it relates to the broader markets. So one of the things we'll do this week, everybody, is exactly this. What sectors are holding up this week? If this is a difficult week, Rachel, that's one of the things we can absolutely lean into, isn't it?
Definitely. Yeah, relative strength will tell us a lot about what's actually outperforming versus underperforming the market. So I think we have a lot of tools that we can use to see that and basically just compare. I know a lot of investors will compare, put that healthcare, for example, in the numerator, in the S&P 500 in the denominator. And so if that line is moving up, healthcare would be outperforming the S&P. And if that line is moving down, healthcare would be underperforming the S&P. So that's typically what a lot of traders will look for as far as looking for those areas of relative strength.
Yeah, relative strength, one of the key components to the management of how you want to go forward. It's not uncommon, everybody, that the groups that held up best during the difficult window are the first groups that outperform when the market shifts once more. So it is definitely something. You might not be ready to deploy money on what you're seeing at this point today or even this week, but it can tell you a little bit about maybe where you're going to find opportunities when the rest of the market does, in fact, turn the corner. So hopefully that gives you all something to keep an eye on as we move towards Tuesday. So with that, Rachel, as always, love having you back. Thanks for being here this morning. I'll see you we'll revisit this once more when we get together again in March. I look forward to that.
Thank you. I do too. Thank you.
Thanks, Rachel. And thanks to all of you, everybody. I'm really glad you all joined us today. Lots to cover, obviously, a very big week on deck here. Please take advantage of that link in the chat to add back in that chart that we discussed, the look at the stocks in the S&P and the NYSE that are making new lows, new highs, and over the major moving averages. Hopefully you can get a little bit of effort from that, or you can add that to your overall layouts. But big thanks to Connie Hill in the chat as well. Follow us on X. Hit that thumbs up button for us down below, everybody. And then, of course, keep it tuned right here to the Schwab YouTube coaching channel. We got much more coming for you all day today. So with that, thanks for being here. Have a great Monday, everybody. We'll look forward to seeing you all again real soon.